Hey, what's up everyone? We are back with another review video of 5 stocks that giant investors are buying, and what better way to kick things off for the most recent quarter of trades than to look at what is by far the largest asset management company in the entire world in BlackRock, who, being led by CEO Larry Fink, it's often considered the one company with the most influence over the entire stock market, as they currently hold over $10 trillion of assets under management. That's what, like, probably close to half the entire economy of America. I mean, it's freaking wild how large they are. Anyway, being that they have so much influence, it's always interesting to see what stocks they're buying, and they were just forced to disclose all their purchases from the previous quarter this past week. So let's take a quick look now at the 5 largest of those purchases, and as always, I'll give you my own opinion on each one, and I'll even rank them from best to worst too, just to make it a little more fun and interesting as well. By the way, if you enjoy these type of videos, then please let me know by hitting that like button and subscribing. It also helps keep my channel alive, and it means a lot to me, so thank you for that support. But with all of that said, let's go ahead and jump straight into this list. Alright, so let's count down here from smallest to largest position in the portfolio among these stock purchases here. And coming in at number 5, purchase number 5, we have the retail giant Costco, ticker symbol COST, which only makes up around 0.5% of the overall portfolio, yet it's still worth over $23 billion after increasing it by another 5% last quarter, adding over 1.7 million more shares. Now, I do believe I have talked about Costco maybe a couple times in the past, but as you might recall, it's a name that I consider to be pretty strong in the retail space. However, it's definitely not my favorite. In terms of size and strength though, there is a lot to like, as the company has been growing their financials in most years, with last year in particular seeing pretty gigantic sales of over $240 billion and several other billions in net income profit as well. However, for that size, $6 billion on the bottom line compared to over $240 billion on the top line, that's pretty weak margins in my opinion, as it's only less than 3% that they're converting there. In terms of market share though, you do have to respect the fact that they are currently the 3rd largest retailer in America, only behind 2 even larger behemoths like Walmart and Amazon, with also a fairly well diversified retail business that, while it primarily relies on physical giant warehouses, it has at least expanded in recent years into not only growing their online presence, but also operating a pharmacy center, optical center, auto center, and more, all conveniently within their warehouses too, as well as online. Plus, their subscription plans bring in steady recurring revenues for them, which is nice to have too. And usually when people sign up for Costco, they tend to keep those memberships for a long time. And so I'm sure that this is a legacy retailer that can outlast most smaller competitors thanks to that strong business. However, as long as Amazon is around, I just can't find any reason to own this one when I could use that money to buy Amazon stock instead, as most retail growth is obviously found online, while Amazon also has the advantage of being a much more diversified company, particularly within tech, like cloud computing, AI, EVs, video streaming, music, gaming, and much more. And as such, Amazon is not only much larger, doing more than double the sales of Costco, but it's even growing at a much higher rate too. And in fact, it's at double the rate despite that gigantically larger size. So I'm not really sure why BlackRock loves this one so much. I mean, the stock isn't even a great value either, not only trading near a record high, but also hundreds of percents more expensive than the sector median on a PE ratio basis. So even though I like the business, I just think that as long as I have alternatives like Amazon to invest in, Costco will continue to be of pretty much little to no interest for me, and because of that, it's going to get the last place ranking for now until I see what else is on this list. Okay, moving on to purchase number 4 though. Well, it looks like one giant investment company decided to buy the stock of another, with Berkshire Hathaway, ticker symbol BRKB, at another 2% increase, bringing it up to over $45 billion worth in the portfolio. And as I've said in previous videos, Berkshire is the type of company that, I can understand why so many people choose to invest in it, as it's been led by one of the greatest investors in history, and Warren Buffett. Although at 93 years of age, it's more so what he's leaving behind at this point, which is a gigantic portfolio of companies and stocks under their belt, including huge positions in Apple, Bank of America, Coca-Cola, and more, leading to strong financials and cash flows from their insurance companies, their stock holdings, the dividends they collect, and the various services they offer as a giant conglomerate holding company, doing a record nearly $100 billion of net income profit just last year alone, with also another $167 billion of cash on hand, which also broke a new record high last year, adding a lot of safety there as well because of that. However, for me, I've just never really had too much interest in Berkshire, as I've always just kind of seen it as more of like an ETF that holds a lot of, how should I put this, maybe not too exciting type of stocks within the basket. That includes like a ton of banks or insurance companies, railroads, oil and gas companies, and other stuff like that I just usually don't have too much interest in. So as a still kind of relatively young and very long-term minded investor myself, I'm just more interested in handpicking more exciting and innovative individual stocks. And while Berkshire has certainly been a fairly reliable stock to invest in, I just can't envision it soaring a whole lot in the future given its rich valuation at about 100% higher than the sector. I do think it's good for most people though, and I have a lot of respect for Berkshire, and I'm still going to rank it fairly high here at number 3. It's just maybe not as exciting enough for me as other stocks that I would prefer to own. And speaking of stocks that I would own, well, the third largest purchase here from BlackRock is actually one of my largest holdings, and that is Amazon, ticker symbol AMZN, which they increased their position on by adding another 11 plus million more shares, bringing the stake up to over $115 billion worth at about 2.7% of the overall portfolio. And yeah, obviously I just talked about Amazon being one of my favorites for several different reasons. And while the stock is up to a record high after climbing by more than 1,000% over the past decade, leaving behind a much more expensive valuation compared to the sector, well, the fact is that it's actually still pretty cheap when you factor in the future profits growth potential that Amazon has never really cared about, which is actually what I want them to do. As a shareholder, I couldn't care less about their current profits right now. I just want them to focus on dominating some of these biggest, markets in the world, and do that as much as possible for the long term, because I know that in the future there will be huge profits to benefit from when they're leading some of the, some of those most important markets. And we're already seeing some great signs of this, where their most profitable segments like advertising and cloud computing are actually growing much faster than their e-commerce and the totality of their entire business, which is exactly what I want to see as an investor. Last quarter total sales grew by 13%, which is insanely good for their size, but cloud grew even more at 17%, while advertising grew by 24%. And the result of that, well, you can already see it here. Operating income last quarter, it grew by over 200% year over year, and net income, I mean, guys, you're talking about 700% growth for the trailing 12 months. It's absolutely insane how on fire Amazon is right now. And that's why their forward PE ratio is actually 77% cheaper than their 5-year average, while their PEG ratio is almost the same as the sector, because they're growing into that valuation and those metrics there factor that in. And again, none of this even matters to me right now. I'm just saying that longer term, this right here is what I'm looking forward to. More of this, more of that profitability and more of that growth in those areas. But even right now in the shorter term, it again just means nothing to me. I have faith in Amazon stock long term to keep investing in it, even if it's at record highs, because I just know that long term this will be a world leader that governments will probably have to throttle and probably break up into smaller pieces because of how large and dominant and successful they are, and they'll probably continue to be. Anyway, they get the number 1 ranking from me, and it's a pretty easy choice. All right, with that said, we are now left with the final 2 purchases. These are the 2 largest holdings among the list here. And you know what, guys? These last 2 are actually going to give Amazon a huge run for its money at that top spot there. But starting with purchase number 2 here, we have NVIDIA, ticker symbol NVDA, which BlackRock added over 2.5 million more shares of last quarter, bringing the stake up to almost $165 billion worth, and worth close to 4% of the overall portfolio too. Now, it's funny because I actually just put out a video on Nvidia stock talking about how an analyst from HSBC is really bullish on it and still thinks that it can climb another 50% despite the stock having already skyrocketed by over 2,000% in the past 5 years and almost 20,000% in the past 10 years. It's pretty wild how on fire Nvidia stock has been. Now, I don't want to spoil that video for anyone that still wants to watch it, but I will just say here really quick a couple things about Nvidia. One is that even after soaring by so much, well, you have to keep in mind that they are absolutely dominating the AI market, with Wells Fargo projecting around 98% server GPU market share and JP Morgan estimating over half of the entire AI market. And it's because of that, along with the fact that AI is booming right now, that Nvidia has really been putting up tremendous growth that can kind of justify that rise in stock price, with data center revenue, for example, surging by over 400% last quarter, and total profits, net income, well, it's up nearly 7 times last year. Guys, this is what I'm talking about here. It's similar to Amazon in that, yeah, technically Nvidia's valuation is expensive. It's around 30 to 50% higher than the sector on a forward PE, but compared to their 5-year average, it's actually 37% cheaper, while their PEG ratio, factoring in the future growth for the next 5 years expected, it's not only 50% lower than their 5-year average, but even lower by about the same amount compared to the sector. That's pretty freaking wild for what is clearly a giant market leader here. Again, it's very similar to Amazon, where long term they can grow into that valuation. So I do think Amazon is more well diversified, and I'm gonna keep them at the top spot there. But you know, Nvidia is right behind them. I'm gonna put them right there at number 2. They're a close second. But you know what, guys? This last one here, it could be the best one of all. It's actually my personal largest holding in my own portfolio, and that is the mighty Microsoft, ticker symbol MSFT, coming in here at the largest purchase, which BlackRock added another 7 million more shares of, bringing the stake up to almost $230 billion, making it the only stock on the list to make up over 5% of the overall portfolio. And yeah, I love this one. Like the others, it's also up a lot recently with almost 1,000% gains in the past decade. But just like those other leaders, well, Microsoft is also doing a great job of growing into that expensive valuation. And overall, the company has just been absolutely on fire lately. I actually covered them in a recent earnings update video. And take a look at some of these numbers here, guys. Well, their cloud business, it's already the second largest in the world, right? And yet it's still growing north of 30% per quarter. It's absolutely incredible. A big reason for that is thanks to their cloud AI services, where they're seeing huge demand. And speaking of AI, their Copilot AI assistant helped boost their other businesses too, where it's being implemented, especially in Office Commercial, which grew by double digits, where they offer new subscription plans to companies that bundle together AI and Copilot for their employees. They even had Search rise by double digits, also boosted by AI. They had Windows grow by double digits. That's a key rebound there in the PC markets coming off the pandemic. They had more server and dynamics segments rising by around 20% or more too. And they're even seeing Xbox gaming rise by giant amounts as well, with over 60% growth in each of the last 2 quarters. And of course, I've been telling you guys for a long time now, keep an eye on Xbox Game Pass. It's going to be the next Netflix of gaming. And it just so happens that some leaks came out recently suggesting that they'll be adding future Call of Duty games to the platform too, after having acquired, of course, Activision Blizzard a while back. And that would be absolutely huge, guys. Call of Duty is easily one of the best-selling game franchises around. So adding it to Game Pass now, well, that's very likely going to attract even more signups and get them even more recurring revenues there, which is always very important for business. Now, the stock's valuation itself, it is a bit higher than both Amazon and Nvidia, at least on a PEG basis. However, the company is one of the most profitable in the entire world. They're always on fire. Every quarter, their business does tremendously well, and I just have no doubt that they will continue to dominate long term in some of the most important markets out there. So they're going to go very high, obviously. I'm going to just put them at number 2. I have a lot of faith in Microsoft stock. I really do like them a lot. I just personally feel like Amazon as a stock price, it might just be a little more attractive at the moment, just slightly cheaper, but I really feel like you can't go wrong with any of those three there, Amazon, Microsoft, Nvidia, some of the best stocks, absolute best in the market in the entire world. But there you have it, guys. Maybe not the most exciting quarter from BlackRock in the sense that you probably already know most of these names, and maybe you even own some of these stocks too in your portfolio just like I do. But it does make sense to me for, the largest asset management company to want to play it a little safe here with some of the best names in the market like Amazon, Microsoft, Nvidia, who are all proven winners and proven leaders in several different high growth tech markets, some of the most important markets out there. And yeah, so I can't really disagree with their moves there. I like those stocks myself. But let me know what you think about these purchases here by BlackRock. Do you own any of these stocks yourself? Do you agree or disagree with anything I said today? I'd love to hear your thoughts. And is there any other, investment company or famous investor that you want me to take a look at too? Let me know down there in the comment section, and I can make that video for you. But thanks again for stopping by, my friends. I hope that you are all doing well. I hope you enjoyed the video. I'll catch you in the next one. All right, take care, everybody. Bye-bye.